So Tyler, it's a good day for shareholders of Plug Power, ticker PLUG. Stock's up pretty big. It's up about 23%. It was up even more earlier in trading, as you can see, and it's up because this happened. The big announcement that the company and a lot of bulls for the company have been waiting for quite some time. You ready to talk about the good and the bad of this big $1.7 billion funding deal that looks like it might be coming through for Plug Power?
And here I thought today's stock move was just had to do with the return of Roaring Kitty on Twitter.
Yeah, there might be a little bit of stonks action happening here. Could be, but we're going to get into it and talk about what's going on. There's some positive for the company in terms of secured potential funding. $1.7 billion pays for a lot of stuff, but there's also the lingering ongoing issues with the company that investors need to be aware of. I'm Jason Hall. You're watching Investing Unscripted. Tyler Crow's here with me. This video is sponsored by The Motley Fool. If you want to get some really great stock ideas, The Motley Fool's got a deal for you through our partnership for absolutely free. Go to our link. You see it on the screen, fool.com/unscripted. Go to that link. The Motley Fool is going to give you for free its 10 best stocks to buy right now. Definitely check that out. You're going to get some really great ideas to help you bolster your own investing portfolio. Okay, Tyler. So I'm going to pull up the release again and let's talk about what it is and how investors should be thinking about it. We'll get into the details there. So again, see it right here on the screen, $1.66 billion conditional commitment loan guarantee from the DOE for green hydrogen development pipelines. The long and the short of it is, again, it's conditional. They still have to meet some standards, provide some financial reports and some other data that the DOE is going to want to see before they actually fund the loan. This could be a lifeline for the company at this point, right?
Yes, I think we've talked about this potential loan for a quarter or two now. It's been the thing that management has been hanging their hat on, is this major funding initiative that's going to allow them to build out this infrastructure for manufacturing green hydrogen, if you will, or the electrolyzer way of producing hydrogen through a process that basically runs a hydrogen fuel cell in reverse, where you take the water, inject it with electricity, hopefully at least being renewable power, and then you have hydrogen gas coming out of the other side, which you can then store for later. It's an ambitious project. There's a lot of people working on it. If you start looking at some of the earnings calls, earning presentations for the industrial gas manufacturers, they're talking about it a lot. Green hydrogen as well as blue hydrogen, not quite as ambitious as green hydrogen in this case. But the Department of Energy is looking to do this because it is a energy storage mechanism that's outside of lithium. It's something that can be produced locally, so you don't have to rely too much on lithium supply chains, which is largely out of the United States. So there's a lot of, on the surface, a lot of ambitious ideas, I guess is probably the better term to use here, that would make sense for this to work. As far as the actual press release itself, I'm perhaps reading into I'm going to read into it as a cynic. We have done videos on Plug Power before, and even you not being the most ardent believer of it, I'm the cynic of the two of us. The thing that I read about it is, number one, it said it was a conditional commitment. So it seemed to me like it hasn't actually changed a heck of a lot more than what we were talking about several months ago. A conditional commitment, it is basically still going through the application process. The fact that it's an announcement, the current company CEO threw a few words in. Normally, if this has made significant progress, you'd get some sort of press release also, or a commentary from the Department of Energy program that would say, oh, we're happy to be working with Plug Power, that sort of stuff. The absence of that, I'm maybe fishing a little too much and being a little too cynical, but just the absence of that kind of means like not a heck of a lot has changed. They're still going through the application process.
When it comes to green hydrogen, I think I'm definitely far more bullish than you are. I think looking at Bloom Energy, for example, that's one of Plug Power's competitors. They've made a lot of progress there as well. They've got some pretty big partnerships. It's a bigger business too, still burning a lot of money, and they've generated operating cash in the past, which is something that the Plug's never done. I want to point that out. So like from a financial perspective, it seems like a stronger business. But then you move into some of the companies in the industrial gas space are far more conservative with how they allocate capital, but also are strong companies with great big moats and make lots and lots of money. Companies like Linde, they have joint ventures with companies that are developing green hydrogen technology as well. So there is a lot of momentum behind green hydrogen as a thing. Now, let's circle back to Plug Power, right? I think that's really where we want to focus here. If you watched any of our videos before talking about Plug Power, Both Tyler and I have been very leery about the company as a potential investment because in basically 25 years at this point, Tyler, the company has never generated a profit. The company has never generated positive cash flow in a quarter of a century. This isn't a startup company. This is a company that's been around for a very long time. This is just looking over the past 5 years. The company's stock price skyrocketed with so many other stocks back in 2020 and 2021 during the kind of the stock boom that we saw coming out of the pandemic. There was a lot more interest in green energy at the time. The Inflation Reduction Act, other things were put in place that were going to provide that tailwind to help with green hydrogen. And Plug Power did something smart at the time. They did something smart and they raised a lot of cash on the backs of investors because they did sell a ton of stock during this period to raise cash, right? So you see the stock price going up, the cash price going up. That didn't go up because they made a bunch of money. It went up because they sold a bunch of stock. But since then, they have spent all the money. Tyler, they've spent all the money. They have less money now than they did at the end of 2021. This is up a little bit since they reported first quarter results. That hasn't flowed through because they haven't reported their 10K yet to the S. So it's up a tiny bit. But again, not because they're making money, because they're selling stock to fund it. My point is, we've seen the company get big windfalls of cash to use to spend on building out infrastructure to do these things. But we have yet to see them actually take those windfalls and turn them into investments that generate profits. We can see how the company just still hasn't. This is their operating results and some troubling things. So Tyler, we've got the Q1 results that have come in. They came in end of last week. We've got another video coming out where we actually do take a little bit of a deep dive into the quarter. So this is just going to be a quick breeze through. A couple things I want to highlight. So number one, equipment sales are way down year over year. So there's no growth happening in equipment sales. Now, PPAs and fuel deliveries, I think these two are really important. These two lines right here, because again, PPAs, these are long-term agreements that they have with customers. And then fuel deliveries, this is attached to their equipment sales. Those numbers are growing, but they're still a very small part of the business. And they've spent billions of dollars to build out the infrastructure. Here's the big one, though. This is the thing that really gets me. You start looking at their cost of revenue. So this is just gross margins, right? Still just absolutely pouring money into their infrastructure, and sales revenue for hardware has collapsed, but they basically spent a pretty similar amount of money to run their factories, even though revenues fell by, call it more than half, 40% decline in total revenue, but their total cost of revenue, cost of goods sold, basically stayed the same. Yes, there were issues in the first quarter with supply, higher costs for hydrogen they talked about on the spot market, and they're trying to build these facilities to generate green hydrogen, but we just haven't seen them do anything in the past to turn money into investments that kick off cash flow. And I really want to caution investors that think that this loan is somehow this is a panacea. Somehow this is going to change it. All they've ever done is burn cash in the past. How is this going to be any different? I think I want to leave it there. Tyler, you have anything to add?
No, I think you got it. Again, they have never proven they're a legitimate business. They're just a cash burning enterprise that is good at issuing stock. And until they actually do something that produces a profit, not worth your time.
Okay, we'll leave it there. Investor, beware. There are places you can make money in hydrogen. Look at Linde. Look at some of the big industrial gases companies before you even think about Plug Power. If you look at them a little more on the risk profile, maybe think about looking at Bloom Energy a little closely. But yeah, Plug Power, nothing's changed here. It's just more money for management to burn.